All right. Good morning, everybody. Good morning, everybody, and happy Thursday. Today's October 19th, 2023. A whole lot going on in the world today. We got a big earnings beat from Tesla. We got a big earnings. I'm sorry. Man, I'm off already. Off to a great start. We got a big earnings miss from Tesla, but we got a big earnings beat from Netflix. Tesla, turns out nobody really wants electric vehicles. No matter how much subsidies the government throws, tax credits, benefits, everything. Electric vehicles, the range, okay, they're neat. In the Teslas, they're really nice luxury cars. Push comes to shove, though, guys, the range just kind of sucks and they take too long to charge. And no matter how much money you try to bribe people to buy an electric vehicle, turns out people just don't really want them that bad. And, well, that's a good thing, because if everybody started driving electric vehicles today, the power grid would collapse, because the people running our power grid are the people with the pink hair and the lawyers who block traffic and smash gas pumps. You can't get a power plant built without their approval. And, of course, they don't approve of anything. So pinning your hopes of an economic future on electric vehicles just seems kind of silly to me. But I digress. Netflix, on the other hand, posted a great quarter, adding over 8 million subscribers. You know, this time last year, Netflix was hurting. They were losing subscribers for the first time in the company's history. What happened? I suspect subscriber growth is being largely driven by their crackdown on password sharing. Now, that's a 2-quarter-old story now. They actually started the crackdown on password sharing a few months back. So that was definitely responsible for the big subscriber growth last quarter. The question is, was it responsible for the growth this quarter? You also had Netflix rolled out their ad-supported option, where you can get a cheaper package by having ads playing during your movies. That may have driven some of the growth. Netflix also increased their prices, so that may have driven some of their earnings beat. But great quarter for Netflix. That stock is absolutely surging this morning. So we've got a mixed bag from the big tech names. Noticeably absent from that Tesla story, I didn't hear a lot of mention of AI. Did you? Did any of you guys hear anybody talk about AI? Remember, AI was the thing. Anybody who even mentioned AI could add $100 billion to their market cap. Elon didn't really say a lot about AI last night. He did, however, talk about how Tesla was a good ship and it's well run, but that even a well-run ship has trouble during a storm. That phrase, a storm is coming. We keep hearing that from the likes of Elon Musk and Jamie Dimon. It's almost like there actually is a storm coming. By the way, the 10-year yield hit a high of 4.98% this morning. Yikes. We're pushing 5% on the 10-year now. Interest rates just keep going up. We've got mortgages. The average 30-year mortgage rate hit 8% yesterday, according to Mortgage News Daily. 8% mortgages. Guys, 2.5 years ago, we were talking about 2.5% mortgages. Now we're talking about 8. You just can't do that in such a short time and not expect mayhem in financial markets. But you know what? It hasn't happened yet, so it's never going to happen, right? Right? Paul Krugman, we defeated inflation and it cost us nothing. All you have to do is ignore the fact that people are living in tents by the millions in the U.S. And, oh, yeah, we'll just strip out food and energy and use cars and shelter and everything else people need to live. And then, yeah, the inflation story went great. Good job. Keynesians, keep up the good work. You guys are doing amazing work out there. Another big story going on this morning. The U.S. Attorney for the Southern District of New York is suing Digital Currency Group, along with their subsidiary Gemini and Genesis, which is not owned by Digital Currency Group. Genesis is one of their partner firms. That's owned by the Winklevoss twins, otherwise known as the Winklevi. This U.S. Attorney for the Southern District is saying they defrauded investors of $1.1 billion in last year's crypto collapse, that they hid risks, that they made inadequate disclosures. This sounds an awful lot like an NVIDIA story. That they concealed vital information from investors about just how risky this Gemini Earn program was. You know, guys, I got a lot of questions. This was in the early days of my channel in 2021 when anything crypto was surging. And, you know, we had a smaller audience back then, but I was getting a lot of questions on some of my first live streams and some of my videos, people asking about these DeFi platforms. And my answer was always the same. When somebody offers you a 15% risk-free return, run. They're selling you snake oil. There's no such thing as a risk-free 15% return. especially at a time when back then the yield on a U.S. 10-year Treasury was like 1%. If you can borrow money from the government, or if the government can borrow money at 1% and the banks will loan you money at 2 or 3%, why would anybody pay 15% and tell you it's risk-free? The only reason to borrow at 15% is because nobody else will lend to you unless you raise interest rates that high. And the reason people demand interest rates that high is because what you're doing with the money is risky. But all these DeFi platforms, they were saying, no, it's risk-free. It's a sure thing. It's a lock. We're using our proprietary trading algorithm and this and that, unicorns and rainbows. And, oh, you just don't understand the science. Okay, boomer. Well, all that money went up in smoke. It started with the Terra Luna collapse, and then Three Arrows Capital, and then FTX. And I'm sure I forgot another half a dozen high-profile bankruptcies in between. Now, I suspect that what's going on with this digital currency case is we had some big testimony from Caroline Ellison. That's Sam Bankman-Fried's girlfriend / roommate / polycule partner, or whatever it is they were up to in that penthouse in the Bahamas. She testified against Sam Bankman-Fried last week, and that testimony was damning. They read transcripts of messages between Ellison and Sam and other executives at FTX and Sam's parents, and messages between Alameda Research and Digital Currency Group people and Gemini people that basically said they all knew that FTX was going belly up, and Genesis and Gemini were trying to get their money back before FTX failed. In other words, they knew FTX was a fraud and that they were exposed to that fraud, and they didn't tell their customers and their clients, which means they withheld vital information relative to the risk of the investment from people, because they knew if they told people that, they'd go to withdraw their money and that they were insolvent. They withheld that information from their investors. We have a word for that. It's called fraud. Digital Currency Group, by the way, that is also the owner of Grayscale, who controls GBTC, the Grayscale Bitcoin Trust, the single largest holder of Bitcoin in the world, who is right now fighting with the SEC to convert over from a trust to an ETF. The big holy grail of Bitcoin investors. Any day now, bro, we're going to get a spot Bitcoin ETF. Be careful what you wish for, Bitcoin guys. The second you let big money get a hold of an ETF that can control the price of your thing, Bitcoin, well, that's exactly what they're going to do. They're going to use it to control the price. They're going to use it to siphon off demand, move price to do what they want. So I will not be celebrating the adoption of a Bitcoin ETF or the approval of a Bitcoin ETF by the SEC. Yeah, I'm sure Bitcoin price is going to temporarily surge, but in the long run, I think that brings more trouble than it's worth. Well, GBTC, they're also embroiled in this case now with the U.S. attorney in New York. Just a whole big mess. Again, guys, the takeaway there, if someone's offering you a risk-free 15% return, run, do not walk for the exits. And with that, let's shrink my big melon of a head and see what's going on in markets today. While we're doing that, please hit that like button. Helps with the YouTube algorithm. And if you're new to the channel, won't you please subscribe? We do this every morning. Come and have your coffee with the melon heads. CNN's Fear Greed Index is still sitting pretty at 35, right in the middle of fear territory, where it's been for almost 2 weeks now. S&P 500 is up this morning, though, about 10 points, 0.25% higher. Not a lot happening in stocks this morning. That Tesla and that Netflix quarters, they're kind of offsetting each other, so the market isn't really sure where it wants to go. The Dow is up 33 points, also 0.1% higher ahead of the opening bell. The NASDAQ, though, leading the way higher. That's up 0.5%, 81 points to the north for the tech-heavy NASDAQ. The U.S. dollar this morning is a little bit lower, down 26 basis points at 106.31. And the bond market is moving again this morning. Check this one out. Now, it's off its recent highs. We got the 30-year Treasury yielding 5.01%. That's up 2 basis points this morning. The 10-year Treasury, 4.937 on the 10-year Treasury. That's up another 3 basis points this morning. This was as high as 4.98. Guys, the 10-year is running like blazes. Now, I suspect we're probably going to stall out a little bit around 5%. I get the feeling that psychological barrier, that big round number. I think there's probably a lot of guys who program the algorithms to start buying the 10-year when it hits 5%. When it gets there, I think you'll probably see some buyers materialize. So we may stall out here a little bit and sit at 5 for a couple of days before resuming higher, because the underlying weakness in the bond market, the disappearing liquidity, that is unchanged. Until we get some direction from Congress and what's going on over there, or until we get some direction from the Federal Reserve about their quantitative tightening program and their rate hikes, I don't expect anything really fundamentally to change in the bond market. But I do think that psychological barrier of 5% is probably going to take a little while to break. We may stall out there. The 2-year is yielding 5.22. That's about a half a point higher this morning. And the 1 month at 5.408, essentially unchanged this morning. Looking over at the commodities board, gold just doesn't care about that rising 10-year. It's amazing. It's been incredible to watch this last week and a half. Gold has just shrugged this thing off like no big deal, no never mind, trading at December futures 1,966, down just $2.40 this morning. Again, the 10-year treasury is pushing 5% this morning, and gold just doesn't care. This is remarkable. Something fundamental has shifted in the behavior of safe haven assets with this spike in interest rates in the last 2 weeks. Unless this is about to snap back and gold is going to take a big dive at some point in the next few days, I'm not saying that's going to happen, but that would have to happen in order to have any kind of a return to the normal behavior of gold in a rising rate environment. Silver's doing the same thing. December silver futures at 23.02. That's down 7.5 cents this morning, or 0.33%. But again, silver holding up remarkably well considering what interest rates are doing. We've got platinum is unchanged, down 0.2% today. Palladium down 2% at $1,111 on December palladium futures. West Texas Intermediate crude, December futures trading at 86.42. That's down about 86 cents. We've had some movement on the Venezuela sanctions front. This morning, the U.S. has eased up sanctions on Venezuelan oil. I suspect that is behind this dip in West Texas Intermediate today. And that's about it for the commodities board. Let's check out this Tesla story. Tesla tempers growth expectations as Musk sees storm ahead. CEO says Tesla is slow walking their Mexico plant construction as the company misses third quarter profit and sales estimates. And there is that hideously ugly Cybertruck. That thing looks like a rejected prop from the set of Back to the Future. I hate the Cybertruck. It's gross, whatever. Elon Musk is dialing back expectations for Tesla as years of rapid expansion collide with rising interest rates and more cost-conscious consumers. After months of persistent price cuts, Tesla's margins have fallen well below the floor once set by its recently departed chief financial officer. The company is, quotes here, ruthlessly cutting costs to keep up, according to vehicle engineering chief Lars Moravy. But an unpredictable economic environment has Musk feeling paranoid, and as a result, Tesla is slow walking its newest factory in Mexico. They're worried about the economy here, guys. They're worried about the market. They're saying people are not going to be able to afford cars. Elon Musk is watching those rising interest rates, and he's saying that's auto loans getting more expensive. It means people can't finance my cars. He can read the writing on the wall. Tesla is an incredibly capable ship, the chief executive officer said on Wednesday. After reporting earnings that missed estimates, we're not going to sink, but even a great ship in a storm has challenges. And just a little bit of the numbers here. The company missed both earnings and sales expectations for the quarter, reporting that profit, excluding some items, fell to 66 cents a share, short of the 74 cents that Wall Street had estimated, while revenue rose to $23.4 billion. But analysts were expecting $24.06 billion. So a miss on the top and bottom line. But the one thing I want to mention, profit excluding some items fell to 66 cents a share. Tesla is a growth company, a growth story, and you can't have a growth story if your profits fell. That's not growth. That is ungrowth. So Tesla needs to be revalued here, and that's largely what we're seeing ahead of the opening bell this morning. We've got Tesla stock is down 6.5%, trading at $226.82 ahead of the opening bell. Now, this is a big company, guys. It's $770 billion market cap, down 6.5%. This is a pretty big loss this morning. Now, I would also mention, related to EVs, we had this story in Bloomberg this morning. The world's biggest battery maker, CATL, or cattle we'll call it, earnings miss as EV sales dip. There it is again, EV sales dip. It's a good thing we're pumping hundreds of billions of dollars into subsidizing EV sales that won't even sell if we pay people to buy them. That's amazing. Good job. Great policy there, that Inflation Reduction Act. Heck of a job. Keep up the bad work. Contemporary Amperex Technology Company, or ticker CATL, the world's biggest battery maker, posted third quarter net income and revenue that missed estimates as a slight cooling of demand for electric vehicles on its doorstep, a price war, and rising competition in China eroded earnings. Net income rose 10% from a year earlier to 10.4 billion yuan in the 3 months through September. Cattle said in a filing on Thursday, well below estimates of 13 billion yuan. Revenue increased to 8.2% to 105 billion yuan, marking the slowest rate of top-line growth in 3 years. Now, I also want to point out something noteworthy in this story here. This is ticker CATL or Contemporary Amperex Technology. One of the highest profile production deals, a proposed $3.5 billion plant in Michigan to be run by Ford Motor Company with Cattle's technology, is under scrutiny due to the company's Chinese roots, and construction has paused. The situation is further complicated by a union labor dispute at automakers in the U.S. And the reason why I'm zeroing in on this paragraph, this is one of those big Inflation Reduction Act factories that we just pump the subsidies into this plant to build batteries for electric vehicles that it's questionable whether people want them, all right? Forget my personal opinion on EVs and how much they suck. The fact is we're subsidizing the heck out of these things, and the growth and the adoption of them is slow at best. But now this is a company that we're borrowing money from a bond market that does not have the liquidity to lend us, to spend extra money, extra debt spending into the economy, supposedly to fight inflation, even though that's very inflationary when you do that. And we're doing it to build a factory using Chinese technology. Okay, maybe we don't get into the geopolitical mess of that and how stupid that is. But now this factory has paused construction because of the labor dispute and because of the fact that, hey, guys, this is a Chinese company's technology. Maybe we shouldn't be doing this. Maybe this is a risk. What a mess this story is. The Inflation Reduction Act. I mean, it's a distant second place as far as the stupidest policy decision of 2022, well behind the release of the Strategic Petroleum Reserve. But my God, what a just god-awful piece of legislation, the Inflation Reduction Act. Here it is. We're subsidizing the construction of this factory with billions of dollars of money we don't have, borrowed from a bond market that doesn't have to lend it to us, in order to build a factory that uses Chinese technology that is going to build batteries for vehicles that nobody wants. Okay, moving on. Netflix shares climbed nearly 14% in pre-market trade on strong subscriber growth. This one is going to offset a lot of that decline in Tesla stock today. That's why I think the NASDAQ is heading higher, because Netflix posted a blowout quarter. Netflix shares were sharply higher in pre-market trade early Thursday after the streaming platform beat Wall Street estimates in its third quarter results. The stock was up 13.8% as of 5:24 Eastern Time. The company reported net subscriber growth of 8.8 million, well ahead of the expectations, and marking the biggest quarterly growth since the second quarter of 2020. Guys, the subscriber growth in the second quarter of 2020, that's when everybody in the world was basically under house arrest and they had nothing to do but watch Netflix, even though their content is garbage these days. But this is an amazing quarter for Netflix. 8.8 million subscribers, the most since the lockdowns. The firm also said it expected an operating margin of 20% for full year 23 at the top end of the company's prior guidance. During the quarter, Netflix cracked down on password sharing, now limiting the use of an account to one household. The tech firm also added a new subscription option that allows users to pay less if they view advertisements before and during films and shows. So you've got the subscriber growth being driven by both the crackdown on password sharing and the rollout of this new ad-supported option where you can pay a lower monthly fee if you watch a few ads. Combine that with the fact that they're raising prices. So Netflix has this big, what I think is one-time growth in subscribers. It may last another quarter or two, but it's not going to be an ongoing thing for this company. And did not mention here, Netflix is going to start cutting back big time on the money they spend on their content. And I think without content, this company is not going to do very well. There's just so much competition in the streaming space now. So enjoy this win, Netflix shareholders. Your stock right now is up 16, almost 17% pre-market. So it's going to be a good day for Netflix shareholders. Hey, look, it's your money, guys. I can't tell you what to do with it. If I were a Netflix shareholder, I would be looking to take some profits here. That's all I can tell you. Moving on from this one, Gemini Digital Currency Group sued by New York for defrauding customers of $1.1 billion. The suit by the state alleges money lost in risky crypto asset loans, and the state is escalating their crypto crackdown. Gemini Trust Company and Barry Silbert's digital currency group were sued by New York's top law enforcement officer for allegedly defrauding customers of $1.1 billion. Escalating legal woes for two companies hit hard by last year's plunge in cryptocurrency markets. The lawsuit filed Thursday by the New York Attorney General Letitia James accused Gemini, which operated a crypto exchange and digital currency groups Genesis Global Capital, of failing to disclose to investors the risks of a crypto lending program they started in 2021. And guys, in the description, I had mentioned that it was the U.S. Attorney for the Southern District of New York. I apologize. That was incorrect. It is the New York Attorney General Letitia James who is leading this suit, not the U.S. Attorney for the Southern District. I apologize for that mistake. I will correct that after the stream is over. The venture's assets collapsed last year amid several high-flying bankruptcies, including Sam Bankman-Fried's FTX. Gemini, founded by Tyler Winklevoss and Cameron Winklevoss, you know, the two guys who claim that they created Facebook, lied to customers about how risky loans were in its venture with Genesis and failed to disclose that at one point, almost 60% of its third-party loans were to Bankman-Fried's crypto trading firm Alameda Research, which we know was run by Sam's girlfriend. Genesis and Digital Currency Group were accused in the suit of trying to conceal spiraling losses. Now, it's that last sentence there. Genesis and DCG were accused in the suit of trying to conceal spiraling losses. I'm 99% sure that that is being driven by Caroline Ellison's testimony against Sam Bankman-Fried from last week, because that's exactly what the messages that she was reading and what she was describing was saying about how Genesis and Digital Currency and Gemini, they were all trying to get their money back from FTX at the last minute because they knew FTX was insolvent. And the fact that they didn't go public with that information, that they didn't disclose it to their investors, that's withholding vital information. That is fraud. Not to mention the fact that it was incredibly stupid and risky to put 60% of your assets into one basket. But hey, that's crypto for you, folks. And a couple of things I want to mention today, guys. We'll skip right over this story. We have got a lot of Fed governors who are going to be talking today. It is jawboning Thursday because at 9 o'clock, we've got Fed's Jefferson. At 12 o'clock, Fed's Powell. These are all Eastern times. 13:20, Fed's Goolsby. 13:30, Fed's Barr. 1600, Bostic. 1730, Harker. 1840, Logan. They are just rolling out all of the Fed governors today. I don't know what it is. The Fed has something on their mind that they want to tell the world. I don't know if they're going to have half of them come out hawk, half of them come out dove, or if this is going to be some kind of coordinated message. But you have got 7 different high-profile speakers from the Federal Reserve on the docket today. Something is up. I don't know what they're going to be saying, but pay attention at noon to that Jerome Powell thing at the Economic Club of New York. That will probably be the most important one when the Fed governor is speaking. Just got to love when these guys come out and start jawboning. And I want to say thank you very much to Mr. Wesley Masterson, who says sarcastically, I remember when 2.2% on the 10-year was something to be afraid of. I remember it too. I said that a lot, often and loudly. Thank God. Thank God to Fed. I'm guessing you're saying the Fed. Thank God the Fed knows what they're doing. You know, the 2.2%, I've kind of Monday morning quarterbacked that thing an awful lot because that was historically at 2.2%. If you connect the dots of that trend line in the 10-year Treasury going all the way back to the 1980s, 2.2% was roughly the point where historically in that trend line something would break. I suspect the problem with my 2.2% estimate wasn't the value, it was the speed at which we got there because the Fed raised rates so fast. I mean, they 75 basis point hikes 4 months in a row last year. I suspect the speed with which they raised rates, which is one of the reasons why a lot of the banks were caught off sides and why Silicon Valley Bank was failing and why Bank of America has $131 billion of unrealized losses, is because everybody, self-included, underestimated just how fast they would raise rates. So if they had raised rates much slower, would that 2.2% thing have worked out? Maybe, maybe not. We don't get any do-overs in this business, but suffice it to say that 2.2% target was wrong because we're approaching 5%. Now, as far as something breaks, let's keep in mind we did have the second, third, and fourth largest bank failures in U.S. history within the last 6 or 7 months or so. So something already broke. 3 somethings broke. Oh, also Credit Suisse, globally systemic important bank or global systemically important bank, they also failed. So there's been a lot of somethings broke already. It just didn't drag the whole market down with it. The Fed rolled out their bank term funding program, printed $100 billion, and the problem went away, at least for a little while. Thank you very much, Mr. Wesley Masterson. I'm digging the Command and Conquer General's logo, by the way, on the picture there. And Charles Coughlin, thank you, sir, for the super chat and support of the channel. He says, unless Teslas are being charged with nuclear power, coal and natural gas are almost certainly what actually fuels them. Silly rabbit, Charles. Everybody knows electricity comes from the wall. That's where we get power from. It comes from the wall. And since walls don't have any carbon emissions, electric vehicles are good for the environment, right? Or do we actually burn fossil fuels, lose a little bit of energy by converting it to electricity, and then lose a little bit more energy by sending it through the grid to your house, and then lose a little bit more of that energy when we charge up the battery, which loses a little bit more of that energy when it converts it into kinetic energy in the movement of your car? Oh, well, maybe electric vehicles really aren't that good for the environment. And then let's also overlook the fact that the mines where they dig up these rare earth elements, the lithium and everything to make the batteries for these electric vehicles, that they're some of the filthiest, most toxic places in the world. Nope. Electric vehicles are good for the environment. The chick with the pink hair said so. So don't challenge that dogma. Get out of here with your silly science. Thank you, Charles Coughlin. I appreciate the super chat, support of the channel. You're right. Like, look, there's just EVs don't solve climate change. They don't solve carbon emissions. They just don't, because we emit carbon when we generate electricity. It's ignorance. It's a testament to the sad state of our education system that people think EVs are somehow good for the environment. It just shows you how bad our education system is. Mike M., thank you, sir. He says, how about Ford trying to sell 100,000 EV trucks? I tell you what, Mike, I'll buy one of those F-150 Lightnings long before I'd even toy around with the idea of buying one of those Cybertrucks. The Cybertrucks are just so ugly to me. The F-150 Lightning, maybe I'd think about it. But I mean, torque is important to a pickup. And the one thing about electric vehicles is they put out a ton of torque. It makes more sense to go electric with something like a pickup than it does a passenger car or a sedan, because the torque, I think, is going to do a lot more for a guy driving a pickup. But that range thing, I can't get past the range and the charging time. Imagine if you got a crew on the road, you're a contractor, and the truck needs a charge. So you got to park the thing and wait for 3 hours or 2 hours, whatever, while your truck charges. And meanwhile, you're paying your guys to just sit there and wait while it charges. I don't see mass adoption happening until we overcome these technical hurdles. Now, there are stories promising 10-minute charging times and 300-mile ranges of EVs. I'd love to see it. I'll believe it when I see it. But as far as 100,000 EV trucks, it's ambitious. I think they have to say that, because when they say that stuff, the idiots on CNBC report it, they repeat it, and then now the ESG funds will buy their stock. I don't really think they're going to sell 100,000 EV trucks anytime soon. But I'll buy one of those F-150 Lightnings long before I'll buy one of the Cybertrucks. Thank you, Mike M., for the super chat, sir. And thank you, Steve Voitis. He says, Tesla Cybertruck looks like dog from Black Mirror's Metalhead episode. I have not seen that episode, so I don't get the reference, but that thing is ugly. Come on, guys. Are we still pretending that the Cybertruck is a good-looking vehicle? That thing, it looks like a rejected prop from Back to the Future, or it looks like something that would have been driven by the cops in Running Man, or it looks like a reject from the 80s, guys. It's not a visually appealing vehicle. It's ugly. It's ugly as sin. What are you doing, Elon, with that truck? And forget the fact that, the hilarious throwing the rock or whatever at the window, like, whoops, turns out that glass can break. That was kind of funny. Thank you, Steve Voitis. I don't get the reference, but I'm going to have to look up dog from Black Mirror's Metalhead episode. Appreciate the super chat, sir, the support of the channel. And thank you, Tim Duffy. He says Netflix up over 16%, short covering. I feel sorry for anybody who was short Netflix ahead of that earnings report. You're definitely going to get a little bit of that short squeeze. People are going to have to cover. You're going to have some margin calls if you're short Netflix. I don't know that the short interest in Netflix was that high, but also expect that short covering to be partially offset by profit taking. Up 16%. Some people are going to be taking profits here. They'd be silly not to. So I'm not sure if we're going to also see a short squeeze. I don't have the information on short interest on Netflix in front of me. but it's going to be a good day for Netflix. I can tell you that much. Thank you very much, Tim Dunphy. And thank you, everybody, for your time this morning. I appreciate you having your coffee with the Melonheads. Thank you to my Patreon supporters. I had a good time talking to you guys yesterday on our Zoom call. There's a link down below should you feel so inclined. Hi, Mom. Hi, Dad. I love you guys. Till next time, live small and dream big.